is an economic disaster, a downturn that results in financial losses. However, for those with an informed perspective, a calculated approach, a recession can be much more than just a period of economic decline. It can present a unique set of opportunities. To begin with, let's define a recession in layman's terms. A recession is a period typically lasting for a span of several months, characterized by significant declines in economic activity. It manifests as a decrease in gross domestic product, GDP, a drop in income and employment levels, a slowdown in manufacturing, and a slump in retail sales. It's an economic phase that seems to be shrouded in gloom, isn't it? But here's an interesting thought. What if we could convince you that a recession may actually be a golden goose in disguise? To understand this, you need to consider the behavior of asset prices during a recession. Essentially, these prices tend to take a dip. For you, this could be akin to walking into your favorite boutique store and discovering that every single item is up for grabs at discounted prices. That's the exact scenario a recession can create for those who have the foresight to see beyond the immediate downturn and the bravery to make investments. Despite the declining economy, stocks, real estate, and other valuable assets can become available at tempting discounts. It appears like a nationwide clearance sale event, only this time it's the stock market and property listings. So why exactly do these prices fall during a recession? The answer lies in the economic realities that businesses face during a recession. Many businesses undergo a decrease in their profits and are forced to navigate with tighter budgets. In order to keep their operations running, they may have to resort to selling their assets. But they're not just selling a few items here and there, they're offloading vast amounts of assets, which leads to an increase in the supply of these assets on the market. And as per the basic rule of economics, when supply increases and demand remains stagnant, prices are bound to decrease. This scenario creates an opportunity for savvy investors, a chance to purchase these assets at lower prices and then hold on to them until the economy recovers. Because if we look at historical patterns, the economy always tends to bounce back. Moreover, a recession can act as a filter, eliminating some businesses that aren't able to withstand the economic downturn. This creates a market vacuum that smaller, more fierce and resilient businesses can fill. It's a process similar to a forest. It may appear destructive at first glance, but in reality, it paves the way for fresh growth. Another interesting aspect is the delayed official confirmation of recessions. They are typically not confirmed until several months after they've begun. This can provide knowledgeable investors with a head start, as if they possess a crystal ball that enables them to glimpse just a few steps into the future. So, as daunting as it may sound, a recession can indeed present golden opportunities. Let's delve deeper. During recessions, there's a shift in the business landscape. The weak get weaker and the strong get stronger. It's survival of the fittest. Recessions are like a storm sweeping through the economy. They may seem destructive, but they also clear the ground for new growth. As the winds of economic change blow, weaker businesses often find it hard to hold their ground. The landscape of commerce changes, and those unable to adapt are swept away. This harsh reality of economic downturns creates a vacuum, a space that begs to be filled, and that's where opportunity knocks. Enter the more aggressive, adaptable businesses, the ones ready to weather the storm and seize the day. These businesses, often smaller and nimbler, find the newly cleared ground a fertile field for growth. They are the green shoots that emerge after the storm, ready to thrive in the sunlight that weaker businesses could no longer withstand. But it's not just about survival. It's about the potential for growth. History has shown us that there's always a rainbow after the rain, a bull market following every recession. The market has a way of bouncing back, often with renewed vigor. This rebound typically benefits those who had the foresight to invest during the downturn. Stocks bought at a discount during a recession can provide handsome returns when the market recovers. Moreover, recessions can also be an excellent time to start a new venture. With less competition and lower asset prices, the barriers to entry are significantly reduced. It's a time when the brave and the bold can step forward, setting the foundations of what could be the next big thing. In essence, recessions are not just about survival, but about seizing opportunities. They are the crucible where the future giants of business are often forged. With you at the right mindset, they can be seen not as a crisis, but as a catalyst for innovation and growth. Thus, a recession can be a time of great opportunity if you know where to look. Knowing about the potential opportunities is one thing, but how do you actually leverage a recession? Here are some strategies. Firstly, it's crucial to have a cash reserve. Recessions can bring about unexpected job losses or pay cuts. Having a pool of emergency funds can be your safety net during these turbulent times. It allows you to weather the storm without having to resort to high-interest loans or credit. Secondly, adopt a frugal mindset. Recessions are not the time for extravagant spending. Instead, focus on saving and investing your money wisely. It's about making every penny count and using it to your advantage when the right opportunity arises. Now, you might be wondering where to invest. One option is gold. Traditionally, gold has been a safe haven asset during economic downturns. Its value often increases when other investments falter, providing a buffer against losses. But don't just invest in assets. Invest in yourself too. Use this time to learn new skills, to make yourself more valuable in the job market. Whether it's learning coding, digital marketing, or a new language, these skills can open up new doors and opportunities for you. Another promising area for investment is real estate. As asset prices fall during a recession, so do property prices. This could be your chance to buy property at a discounted price, and when the economy recovers, you could see significant returns on your investment. Lastly, but most importantly, be proactive. Don't sit back and wait for the recession to hit before you start taking action. Keep a close watch on financial markets and trends. Try to spot the signs of a looming recession and act before everyone else does. Remember, in the face of a recession, the key is not to panic, but to prepare. It's about being strategic, making calculated decisions, and most importantly, staying resilient. Recessions can be tough, but they can also open up new avenues for growth and prosperity. It's all about being prepared and making the right moves at the right time. So, to recap, a recession isn't necessarily a bad thing if you know how to navigate it. Remember, during such times, everything becomes cheaper, including stocks and real estate, providing a golden opportunity to buy assets at a discount. With many businesses folding, there's less competition, paving the way for smaller, more aggressive companies to step up and take their place. Also, recessions often weed out weak companies, creating more opportunities for new businesses to grow and thrive. Historically, a bull market always follows a recession, meaning recovery is inevitable, and the key, acting before everyone else knows what's happening. But how do you leverage a recession? Keep cash for emergencies, be frugal, invest in gold, learn new skills, and consider real estate. Most importantly, be proactive. Don't wait for the recession to hit. A recession can be a time of great financial opportunity if you're prepared, proactive, and make the right investment choices. So don't dread the downturn. Instead, see it as a chance to rise higher.